Welcome to another episode of Tax Leaders Unplugged. Our guest today is Jelger Buitelaar, and Jelger is the head of tax at RHI Magnesita and held before tax leadership roles at Here Technologies and Trafigura. Jelger has also been a tax partner at EY in London and Amsterdam, and he worked as a tax lawyer in New York before. And today he's based out of the Netherlands. And in this episode, we will discuss the importance of solid processes and the role of data in these as a key to compliance and quality in general. Jelger, welcome to the podcast.
Thank you very much.
Great to have you here. Jelger, I've checked your background a bit and I've seen indeed that you have been a tax partner in the Big Four in London and Amsterdam before moving in-house. I think it's quite a remarkable move. I mean, not a move that we see for most of the tax people when they go in-house. They would typically not be at partner level. Tell us a bit about that move and how you got inspired to go from a partner to an in-house tax leader.
As a partner, or actually when you're working in the Big Four in general, so you're never really the decision maker, right? And so whenever there's a deal you're doing or you're working on a restructuring or something else, you're never in the driver's seat. And at some point I just thought, I also want to be in the driver's seat because, often your advice is always only as good as the information that you get. And I thought, well, if you're in the driver's seat, maybe there's more fun, there's more, you can have a bigger influence. At some point I thought, what, let's try that. So I did, but I agree, it's an unusual step, and a lot of people were surprised as well, because as a partner you basically have a job for life. So far so good. I have to say though, it was quite challenging in the beginning, because I had this sort of what I would call advisory reflex, right? And it took me quite a while to shake that off, actually. And I think I've shaken it off now completely.
What do you mean with that advisory reflex?
So the difference between an advisor and an in-house role, you just have to make a decision, right? So there are risks, there are always risks, and you have to make a decision, and then get on with it. And as an advisor, right, you know that there are risks, so you're trying to basically exclude them in whatever the advice is that you're giving, of course. But I think the realization that whatever the decision is that you're going to take, there is going to be risk, and it may materialize, but you just, have to weigh the pros and the cons and just get on with it, right? And I think, and especially in the beginning, that was difficult because you tried to basically get 100% certainty on something. So that sort of practical approach, let's call it that way, that took a while to actually to sink in.
Yeah, I hear you. And did that shape you in a certain way that if you now request advice from your advisors, that you want to have it extremely hands-on, pragmatic, ready for implementation? Because, obviously you have been on the other side and now you're in-house. And because I recall from my in-house days that sometimes you get a memo and it leaves you with more questions than answers, right? And then the clock is ticking, time is ticking away. You need to implement something. There are multiple options, and all focus, all pressure is on you because you have maybe a beautiful memo and it analyzes the different implications of the different options. But still, you need to take the call the shots, and you need to take the decision.
Well, so actually, I think it's a question for the people that I hire to advise us. I think so. Because, it needs to be practical, right? And it needs to have, of course, and the risks should be mentioned. But what unfortunately you see too often is that there are no clear conclusions, right, in any memo.
Yeah.
And as a result of what you have, you don't know whether, and especially, this is especially so in Europe, not so much, but especially in countries that are complex, or more complex, right? Like countries in South America or some in Asia. You don't know whether to go left or right? And sometimes, it's a practical approach, and you have to also explain to the advisors then, I mean, in the end, the decision is ours, right? But we need a realistic view on things, right? So I don't want to hear. So sometimes there's still a case that they flag a risk, and when you push them on it, so how big is actually the risk that it materialize? Yeah, you know, hardly, right? Hardly any risk.
Yeah.
But still, yeah, we wanted to mention it. Yeah, okay, great. But then that's not what we're dealing with there.
Yeah. Oh, clear. You explained a bit that on the in-house side of things, you enjoy the fact that you actually make it happen, the implementation of the advice that you get. Any other things that stand out that you enjoy as now being on the in-house side, as being an in-house tax leader compared to the advisory past?
Yeah, so what I really like is that you can really interfere in the business, right? It's not a one-sided, let's say, tax role. No, you can basically ask questions, drive the business, challenge the business on why they are doing certain things, right?
Yeah.
Because they have tax impact in the end, of course.
Yeah.
And that part I really like. And I mean, I have to say that the CFO that I work for also allows me to do that. Because sometimes people don't really like it when you challenge them. But I mean, that's really fun, right? And in the end, everybody gets better from it.
Yeah. All right, clear. So let's go back a bit in time. You made that move from advisory to in-house. So you arrive in the multinational you are currently, and you come in as a fresh new tax leader. One of the things you observed, you told me, was that the processes that were in place were not always up to the standards you wanted them to be, or they were somehow suboptimal. Tell me a bit about that, like how you arrived in the company and how you then observed the current state of affairs as a new tax leader.
Yeah, I arrived in the company because they were looking for a new head of tax, and one of my former clients when I was at EY was approached for this job, but he just had another job, and then he told the company, "Oh, I might know somebody that's interested," and that was me. And well, actually, very quickly we came to an agreement. So I joined. It's about 2.5 years ago. So I'm beginning in 2022. So when I joined, there were quite some. So the company had quite some discussions with tax authorities in various countries, which needed to be solved. Which I knew from the get-go, right? Because there was also a reason that they needed a new head of tax. So I knew what I was getting into, but what I also quickly realized, also by speaking to people in the company, of course, that so the company had undergone a change in operations, right, by setting up a shared service center, and indeed, the processes were not great, right? So the transfer to the shared service center, so it had been done successfully, but let's say without proper handovers, without always the proper training, sometimes with incomplete process documentation and incomplete or no desktop procedures. And so to put it really bluntly, so sometimes tasks and processes and activities were basically just thrown over the fence. So it was basically done, let's say, too quickly, right?
Yeah.
And then in addition to that, and that took a while to get the company to understand it. So they had set KPIs on activities, right? And I'll give you an example. I think especially to people with a tax background speak to their minds, is that in the indirect tax compliance, the KPI has the filing been done on time, without referring to was it actually correct as well, right? So what happened is the scores were 100% on filing, but the returns were not always correct, which then means that the next month, right, you would have to correct everything, and you would have sort of a whole score of incorrect compliance, which of course then triggers questions with tax authorities, etc., would then result in an audit. And so actually it only created more work in that sense. That was really a problem, right? Because it creates more work, and you don't really have the people to do that work.
Yeah.
Sorry. Yeah.
Yeah. So there were processes in place, specific KPIs were tracked, but not always the right ones, right? Because
Correct.
I guess already knowing that everything has been filed and it's all green, that in itself is an achievement, I think, because there are a lot of companies that are not at that level. But then to your point, one level up is obviously knowing about the quality of what has been
Exactly.
filed. So not only has it been filed, yes, no, has it been filed in a timely manner, yes, no, but also was the quality at the desired levels of compliance.
Yeah.
What steps did you then take concretely to go to that level?
Yeah. So just making one additional comment there, also to make sure that if my colleagues are listening, that they're not angry at me. But on the KPI, that's one thing, right? But the fact that, and I think we'll get to that later, but the fact that then the compliance was incorrect was not because they were actually doing something incorrectly, but also because, and this is coming to the data, right? Because the data they were using, right? I mean, you have a shared service center. The shared service center is fed data. They will have to use the data to do the work they're doing. But if the data is incorrect, then you can file whatever you want, but then it's going to be incorrect, right?
Yeah, exactly. It has a deeper root cause, and if you don't address that one, then you will always have quality issues down the road.
Yeah, correct. Yeah, and so what we also did there was we implemented automated master data controls. Yeah, because before that, so there were checks, but I mean, as you will understand, right, in a big group that is basically present around the world, I mean, there's so much compliance, you can only use sample checks, so you can only filter very, very little, and the automated controls made a huge difference.
And you're talking about master data in the indirect tax domain?
Yes, correct. Yeah, correct.
What are some of the examples of data points that you were checking?
Yeah, from the very basic that you, for instance, have an export transaction, but then with VAT, right? So if you have an automated control that says, yeah, this can be happening, right? The invoice is incorrect.
Yeah.
And then immediately you have to go back. Whereas before we had that control, also because the people that are doing the compliance are not tax experts, to call it that way, right? So they don't have that reflection as in, hey, this can't be right. But if an automated control immediately stops the whole process, it goes back and says, guys, this can't be right. So, I mean, that's one of the examples.
And I'm very curious here to learn, like, you have those automated controls, those blockers or alerts that then come up that flag something is wrong. In what form does that in practice happen? Like, is this something that directly goes into your inbox? Is it in a dashboard? Is it in a report?
No, it's in a dashboard, and it sits in the shared service center itself. And for the indirect tax, of course, if something is really, really wrong, then it gets escalated to the head of indirect tax. So I personally do not get it in my inbox, but I do have access to the dashboard. Yes.
Yeah. And so we touch here upon the indirect tax side of things. What about the other tax domains? Any process experience you have there, like corporate income tax preparation, of transfer pricing, documentation? Any learnings that you have gained along the way on how you probably constantly try to improve the process, the quality thereof, and things you can share with the audience, tips and tricks?
Yeah, well, we're still working on it to a large extent. Now, so I mean, we have a real proper process in place, but it is very time consuming. And when we are currently implementing a new ERP system, in which we also, I mean, the aim is to also have automated, let's say, transfer pricing calculations, etc., in there, which then in itself requires a proper segmentation, of course, in the systems of the various transactions. And what we see currently, and and that's why it takes a lot of work, especially the segmentation is important, of course, to get the right price. But the segmentation also depends on, well, have transactions been booked correctly, right?
Yep.
So have they actually been booked as let's say, sometimes, I mean, basic things go wrong, right? So a good as opposed to a service, right? Or and so is it a royalty that we require to pay, or what is it? Currently, so we have a good process in place, so we are very confident about our transfer pricing.
Sorry that I interrupt you here, Jelger, but you're touching upon something which is interesting. I think it's for the second time. So in the indirect tax process, you refer to the master data and the quality thereof.
Yeah.
And now it's the TP process, and it's again like the booking of the data, so the source data.
Yeah.
So this is then a spillover, obviously, between you, the tax team, and the data you need, and then obviously finance being closer to the data, if not the owner of the data. So how do you manage that upstream in the process? The data quality should be improved, knowing that you are tax guy, and this is then the finance organization. Probably tax is part of the finance, but it's another team then. How do you ensure that they get it, that for you this is so important? How do you get them around the table in the first place and work on the project to improve the overall quality of the data?
Yeah. So I mean, so of course so when you start explaining this to them, I mean, you need to be very clear, right? And I mean, the term that I always use is shit in, shit out. I mean, tax is always at the end of the process, right?
Mm-hmm.
So whatever goes wrong before you actually put it in the tax return, then it automatically means that your tax return is also wrong, right? Or has a high chance of being incorrect. And once you start explaining that to people, right, and where the mistakes then come from, right? I mean, it took so you need to convince them, of course, but I mean, it's very easy by just using numbers, right? So if they make a critical error as a result of which the transfer pricing is incorrect, it means that let's say your subsidiary in the US has to pay an amount to the principal as opposed to the way around, right? I mean, and ultimately it's going to be a big mess. But I mean, it's all of that. I mean, that part we just we had to fix a lot of that. So of course, not everything was incorrect, but there were certain process, let's say, or let's call it incomplete processes, and also because it was quite a lot of manual work. Well, human errors, right? And I mean, and those can be avoided as much as possible by, for instance, a desktop procedure. But if you don't have a desktop procedure, then there's still a high risk that it goes wrong.
And what do you mean with a desktop procedure?
Yeah, so desktop procedure is basically explaining so the person doing the work, actually, based on the desktop procedure, they can actually understand what they have to do exactly, right, in a step-by-step basis. So basically, if I would give you the desktop procedure, you would know how to file, let's say, an indirect tax return in India.
Right. So this is a kind of a policy, a written document? Yeah,
it's a written document, exactly, for the people that do the work. So, so basically, it says, okay, when you need to fill this, you need to go to SAP that and get the data. And that data needs to go there. Then you need to make this calculation. So really, on step-by-step written document, what you need to do.
That's interesting. And who is the author of that? Your team?
Well, so it's our shared service center, but with our help, of course, because we know when it is compliant or not.
And then what I always wonder, and you can always take a more generalistic approach because you have obviously quite some in-house experience, but how do you then make it happen in practice? Because I very often see those beautiful desktop procedures, or how they are called, like beautiful documents, very clear steps. But that is, let's say, the theory, right? And now we need to make sure that in practice, every day, for all of their activities they are doing, our colleagues in finance or in the shared service center or whoever it is, they need to adhere to the document. They need to, let's say, play the game by the rules. How do you make that happen? What are your best practices there? How do you can operationalize such a theoretical document?
Well, so it starts with training, of course, and then a lot of monitoring in the beginning. And in the beginning, things go wrong, and then you need to understand, okay, where does it go wrong? And sometimes it's just somebody that forgot to do something, but sometimes when you think about it, or when you reread a desktop procedure, for example, you understand where an error comes from, because it can be unclear, for example, right? So you amend the desktop procedure, try again, until actually you have it. You have it. Let's call it flawless, or at least flawless. Then you're only left with human error. But I mean, it's important to keep repeating messages like that, right? That it is important. Explain to them why it is important. And when I travel, so for instance, when I travel to Brazil, I also always make sure that I sit down with our that's our what we call GSS team there.
Yeah.
That we interact, and that repeat the message, etc., etc. But also make sure that that you're open to questions from their side, because sometimes they don't really understand why a certain thing has to happen, or they have a suggestion to do differently. And discuss it, and then agree on whether to change it or not change it, and then proceed. But repeating that message is really important.
And what are your best recommendations for explaining the why? Because I hear very regularly that in-house tax people are struggling with that, because we are tax experts. We understand it. We understand the technicalities. We understand the complexity of the domain. We also understand that if we are not compliant, what the consequences are. But what are good explanations that you can give for the why that resonate for non-tax people? Have you any experience there? Like, do you use a stick or a carrot? Is there any best practice you have?
No, I don't have a stick or a carrot. I mean, it's just that. Well, first of all, right? If you use numbers and you explain to them why things, what the impact can be of making an error, I mean that always explains things, right? But also, coming back to the example of Brazil, if you have an audit there, I mean, the tax authorities go all in, right? And they ask you for a hell of a lot of information. So if you make an error and the tax authorities find out, they will ask you for a hell of a lot of information, which will also then create more work for the shared service center, because they will be the ones that need to get all that information.
Yep.
Right? So it's not so much, it's really just explaining it clearly, and why it's important for the company, why we want to avoid audits like that. Right, and also because we have a really good relationship with local tax authorities in Brazil currently, and we want to keep it that way, right? So It is important, and that's everybody's. Let's call it, that's a shared responsibility. So we all want to keep it that way, because otherwise it will only create more work for ourselves.
Yeah, and I like that notion of shared responsibility, because in the end, it's the organization that needs to be compliant. It's not the tax team, it's not the finance team, it's all of us, right? And this goes even beyond finance, because even business people, they also have tax compliance exposures, because potentially they travel around, or they need to apply TP policies in one way or another, etc. So I like that shared responsibility concept. Makes a lot of sense. If we go back to, so you have quite some experience in improving processes. If you would put yourself in the shoes of our audience, they are all in-house tax people listening in. What would you take as signs, signals, symptoms, maybe the better word, of suboptimal processes? So say that you would step into the shoes of any random tax manager. You would go into their company, you would look at their processes, and you would try to detect whether they are at the quality they should be, or whether they are suboptimal. What are signs that a process is suboptimal in your eyes? I think you already mentioned efficiencies, so time maybe that there is time wasted on it. I think you also mentioned controversy potentially, but any other symptoms you can think of, like how you would look at processes and the quality thereof?
So I'll maybe good to explain what I did when I joined. So when I joined, so the people that were in the tax team, so they already had a list of issues, right, that were going wrong in the process that they constantly had to fix, right? But then also talking to people reporting in finance, they had their own issues, right, where things were not going well, or things they were struggling with. So to me, and of course, I was not the only one, fixing this process, because also that's a joint operation, right? You need everybody involved. But then, we started talking to people. We started talking to the shared service center, people that were in charge of the shared service center, right? So we basically collected all these issues that people already had, but they never actually, let's say, collectively made an issue out of, right? So you basically had people doing stuff and then being annoyed that they had to do certain stuff every month that actually was not necessary, but they never really flagged it, right? So I basically went through to a lot of people, talked to a lot of people, and asked them, okay, so where do you see things going wrong? Because in tax we see this going wrong, but how does it work at your end, right? Because you're somewhere before tax in the process. So how does it work with you, right? And what do you get then? Yeah, but we get this, but in order to get it right, we actually need to make a slight, smaller adjustment, because we always know that it doesn't, because what we get is always missing this, right? Something like that. I mean, not literally, but and then from there, so basically you collect all the issues and then you work back in the process. Okay, so where does it actually go wrong? What's the source of the issue? Let's to call it that way. And then that's not just tax, it's not just reporting finance. You always have to go to you also need to go to sales, for example. And I mean, I'll give you an example. In Brazil, if you have finished product going out of your plant, you need to have a fiscal invoice. Sometimes, clients or customers need product urgently, right? So then they did not have a fiscal invoice, and they would just, send it off to the client. But that gives you an issue in the process, because in every process, and also in the compliance that you need to do in Brazil, you need to provide that invoice number. But if you do not have the invoice number, right? So actually, then you're already not compliant.
Yeah.
No, it's really simple, and that creates a whole system issue, right? That ends up then at the tax end, as in, it's not, we're not compliant. So it's really going back to the source and see what we need to change, and then make sure that you educate them again, give trainings, make sure that they don't cut corners, put automated controls in place, and sometimes make sure that's proper responsibility and accountability. And for instance, in Brazil, what we had to involve the regional president, and he just said nothing leaves the plant, right, without a fiscal invoice. Because if so, you have to deal with me. And now I'm glad to say it's not happening anymore.
So you went to the regional president, made sure that he or she understood it.
Yes, exactly.
And then the person became the sponsor of
exactly
objective. Yeah. Okay, makes sense.
Yeah.
Um,
But I also think that's important, because you can go, because in the end, right, I can go to somebody, but they don't report to me, and also they have different let's say KPIs, focus points, etc. So you really need buy-in from the group as a whole to fix this, right?
Yeah.
You really cannot do it yourself.
Yeah, exactly. And that again goes then back to the shared responsibility.
Exactly.
And to make sure that everybody understands that.
Yeah.
The problem, obviously, in reality is that people are busy and people just have other priorities, and your priority is not necessarily
their priority. Yeah.
Yeah.
No, so and that's then also coming back to explaining it, right? Explaining why it's important, because if it becomes a problem for the group, in the end, it's also going to become a problem for them, right?
Right.
And I do, and it's difficult, but I do believe that you can really turn around an operation, right, and have those proper processes in place, and even in countries, right, with very high compliance. And I'll give you just on Brazil. So we really had complications with the tax authorities there, right? We were constantly being challenged. We were constantly under audit. And yeah, it was a difficult relationship. And when I went there, so just after I joined, I went to Brazil. And I sat down in a meeting with the tax authorities together with my Brazilian tax team. And I don't speak Portuguese, of course. But I mean, I told them, yeah, guys, we're going to fix this. But, we're really going to work on it. But don't expect it tomorrow. We're sort of, okay, fine, right? So willing. But I was there last April. And then the head of the local tax authority, so we had the meeting, and he actually, he said, great. So when you were here the first time 2 years ago, we both had our lemons, right? But now we've put them together and we made lemonade. So yeah, so literal, right? In Portuguese, though, right? I can't repeat Portuguese, but so that also shows that even in countries with a high compliance burden, improving all these processes really improves your relationship. And I have to say, so our relationship with the tax authorities in Brazil is really, really good, really transparent, a very collaborative and open relationship, right? And that in the end is also what you want, because then, there's no surprises.
Is it a recommendation you would have that you have those processes tested in the highest risk countries first, and then you can roll them out or kind of adapt them to your other countries, or just the other way around? Would you rather go for the easiest country and then step by step make them align to the requirements in the most difficult country?
I don't know, actually. As it happened, we tried it. So the biggest urgency was in Brazil for us.
Yeah.
And that's also why we tried it there. To be honest, difficult question. I don't know if I think you can do both ways. So for us, it worked really well starting in Brazil.
Yeah, let me maybe rephrase it. Like, if I say I'm an in-house tax manager, and I have some processes going on, but we all know processes, they are never perfect, right? So you can always improve them. Mm-hmm. Where do I need to get started to identify the ones to get started with? Is this where they are, for example, dealing with or in touch with processes that cover highest volume of transactions or are in the highest risk countries, and then get started there and go then the rollout to the others, or the other way around? I don't know whether it helps to clarify the question, but I'm more like trying to explain or have an explainer for the audience, like where to get started.
So I don't think there's a right or wrong answer there. I think it really depends, right? For us, Brazil was high volumes, and it was high risk, and we were constantly under audit. So that was really why for us it started there.
Yeah.
But if that for somebody else is in, let's say, I don't know, India, China, or another complex country, then probably that is where you start. Right. And I think also because of the audits we constantly had there, we had a pretty good view already of where it was going wrong. Right. And I mean, and after Brazil, for instance, we had Mexico, where we're also struggling, which is also let's say a heavy compliance country. So that's how we did it. But that's not to say that that's the right approach.
Yeah. I hear you. Something other or another topic. You are obviously working in a group with a lot of legal entities, and we all know like legal entity management comes with a cost. How do you deal with managing those entities and ensuring that you also keep the compliance cost under control for all of them. Tell us a bit about your experiences there, maybe the correlation between legal entities and obviously the cost of managing them, what a tax team can do to drive more efficiencies there.
Yeah, so the team that we have, so the tax team at RHI, so we push heavily on constant legal entity rationalization. We also, so we do quite a bit of M&A, and we have an integration team, right, that also gets rid of excess entities and entities that we acquire. But as a tax team, we are also constantly pushing on that, and also, you know, seeing ourselves, so where can we actually, let's say, rationalize the structure, right?
Is it one dedicated person in your team, or is that a shared responsibility?
No, it's a shared responsibility.
And how does it work? So such a constant group rationalization project, is that then with weekly meetings where you say like, okay, for this month or this quarter, we target to liquidate this one and merge this one, and what are like the best practices?
Yeah, so basically we have what I would call a project team. And there's a project manager on it. He's overseeing the whole process, and we have basically we have got a list of, let's say, 30 to 40 entities that we want to get rid of. Some are easy, some are less easy, right? And a lot of it is also legacy structure that's still there, but it's just never cleaned up.
What are reasons why one is more easier than another?
Wow. Well, yeah, because one entity may still have a legal proceedings in them, right, on environmental, for example, or one entity may have pension obligations that are difficult to transfer, and especially in countries like Austria and Germany, that can be complex, right? So it takes longer. But I mean, easier, yeah, if you have a whole bunch of Dutch holding companies stacked upon each other, yeah, that is easier to get done than in other countries. But I mean, the risk there, of course, also is that you also have to be a little bit careful with because what you end up with, of course, is indirect transfer. And just to give you a really stupid example, so we wanted to clean up the structure with a really good idea. But then it turned out that one of the environmental permits that we had in a country that was sitting underneath had a very heavy change of control clause, right? Which then all of a sudden is a problem. And so an entity that, or let's say a restructuring that you thought, oh, you know, easy to do, let's get it over with before year end, then ends up being very complicated. And it's also a learning point because, you know, we almost did it because we looked at tax and we thought, oh, no tax issue, no capital gain expectation, whatever. But then so check with legal that it turns out, yeah, the permit is pretty, and of course, you know, we're a mining company, so that's pretty essential that we keep our environmental permit. So it was also, it's also a learning point for us not to go too quickly, right? And make sure that you get it done properly. But yeah, I mean,
do you then make sure, because you refer to project team, that in the project team you have representatives of every department, including legal, treasury, and they all work then on the same timelines, the same objectives?
Yeah, so it's not so much that. So we have, so within tax, we have a couple of people working on it, and myself as well, right? So, and whoever answers the question first, you know, that's some. So also there, right? So some people focus on Germany more, some people focus on other countries more. And it's not that we just make sure that the project manager is aware of who needs to look at what, right? And he will then involve somebody from legal or somebody from treasury. And so it's project manager and it's basically tax that are running it, with, of course, a lot of help from legal and a lot of help from treasury, etc. But they legal and so don't need to necessarily be constantly involved as well.
Yeah, because I recall from my in-house days that I had a couple of those projects and I was always full of energy, full of ambition. But then suddenly, to your point, like you refer to one example, but there can be a pension scheme, which is still in there. one or the other IP, a brand or whatever, a liability. And then you rely on other stakeholders to go to the next step in your project. But for them, again, this is not a priority. So you are there like, come on, I want to have this done this quarter. But for them, it's like, oh, we have other priorities. Any experience there, like to make that also a shared goal, or any motivation that you have seen in your organization, which can be used to keep the momentum in such a rationalization?
Well, so a big push for us now is that we're implementing a new ERP system.
Mhm.
Yeah, I mean every legal entity has a certain cost. So in EY, for example, we had a legal entity rationalization team, and the assumption was always that on average, an entity in a multinational company costs about 50K to run, right, on a yearly basis.
That's tax, legal.
No. That's so on average, right? And of course,
average.
complex entities take 500K to run, but you would also have an empty holding company where but let's say on average, right? And this is all, but this is also, what is it, 8 years ago, 10 years ago, maybe. So probably the number is now 70K or something. But
Yeah.
now let's say, so that is on a yearly basis. But then if you're implementing an ERP system, you have to add on, let's say, external costs. You have to add on licenses. So let's say to plug an entity in your systems, right? ERP. So I mean, I'm by far not a specialist in that, but that will cost you, let's say, 50 to 100 and complex entities more, right? So if you want to keep your and the implementation of an ERP system, it's costly. So if you want to keep those costs down, you also have to make sure that you plug as little entities as possible in. So you want to get rid of those. So for us currently, that's a big driver to clean up the structure.
Yeah, that makes a lot of sense. And I think that can very easily be explained to, say, a CFO or any...
No. But so actually, our EMT is pushing very, very hard on it. So now they need it's full support.
And how do you make sure that the opposite thing is not happening, that the business or other stakeholders are just creating entities because they go into new countries, they launch new products or whatever? I've heard and seen a lot of things already. Because reducing is one thing, and that's the most difficult thing, but opening a new entity is super easy. It can be done by most countries like this.
Quicker than closing, yeah.
Exactly.
No, that's true. Now, but we've got the delegation of authority in place, right? So it requires approvals from quite a lot of people.
Okay.
And including myself. And we will, of course, so when we do that, and our business is also savvy enough to understand that we don't necessarily need a new entity to do this. So we could also do this, for example, or either with a branch, right, which also has its own complexity, or we do it with an entity from abroad.
Yeah.
So they always come to tax or to legal. Hey guys, what is the preferred setup? That often, and so we don't really have an issue there. Let's say the biggest what is adding to our legal entity count is really M&A, right? Because you take over a group and the group has 10 entities, of which there may only be, let's say, 2 or 3 active ones, but then you still have to get rid of the other 7. And if those are in a country where that's quite complex, then you all of a sudden you have 7 entities extra. And that doesn't mean, so with our ERP system, for example, doesn't mean you have to plug them in. So maybe you can leave them out, right? But that makes it a bit more difficult.
Yeah, and it's a fair point that you are making, because very often during the deal, the people at the table, they don't reflect on potential cleanup costs, post-acquisition structuring costs, where every entity, hopefully can be structured or, merged into another entity, or maybe there are reasons to keep it standalone. But definitely if there are dormant ones or ones which have a lower reason of existence, it comes with a cost to then simplify its structure, right? So that's a valid point. Do you still get all of your entities on one PowerPoint slide, one A3 format paper, or and how do you keep that? Because I recall from my in-house days, that's a painful job, right? To keep all of those entities nicely.
Right. So if I make the entity small enough, they fit on one slide.
And is that somebody in the tax team that keeps that?
No, we have
or is that legal?
no, we have let's say we are a legal / more or less corporate secretarial department that deals with that.
Yeah.
No, but it's a lot. So they do not fit on one slide, especially not if you want to read which entity it actually is.
Yeah.
I mean, if you, it's a bit jokingly, if you really make them small enough, right, then they fit on the PowerPoint A4 slide, but then you have no clue where the entity sits or what the name is. So yeah, let's say cleaning up our structure is really it's top of the list.
Yeah, no, but I hear you, and I really enjoyed like hearing on the one hand the cost that you slapped on like managing one specific entity, 50K, 70K. These are good estimates, but I think for the audience, if you ever would want to work on a business case, I mean, these are numbers that you then can plug in to convince stakeholders that we need the resources, the budget. And then, yeah, on top of it, definitely if you are in the scope of an ERP migration implementation, the lower the amount of entities that should be migrated, the better, obviously.
Yep.
And finally, to keep your LOC manageable, also from a visual perspective, we will all agree that the lower the amount of legal entities, the better. I think in general also for risk exposure, because every entity in itself triggers quite some risks. And it's not only tax risks, it can be legal and whatnot, but there are so many obligations, formalities that should be complied with. Jelger, maybe one final question for you. What is one piece of advice that you would want to give to our audience, all the in-house tax people that are listening in, when they look to excel in their careers, where they maybe want to be in your shoes as a tax leader one day? What is the one single piece of advice that you want to give, looking back at how you did it and the career you had?
Well, I think what always helps is to be very direct in your communication.
Is it because you are Dutch?
Yeah, so probably for me, but I mean, I think it can help everybody. Yeah, and I mean the focus on getting things done.
But can I then raise another question? Like, how can you be direct and at the same time sufficiently focus on the why?
Well, what do you mean sufficiently focused on the why?
Well, I think if we tax people tend to be direct, maybe we cut a lot of corners and we are not clear in what we are saying because we are super biased. We speak another language.
No. Okay, so then the second advice or the third advice is to really, make sure that you speak in general terms.
Yeah. Okay.
So using tax lingo is not going to help anybody.
No. So you drop jargon.
Honest, if I have a US advisor on and they talk about these regs and those regs, etc., I don't even know what they're talking about, right? So imagine that you have somebody that does not understand tax lingo at all. Then you have to make sure it's general and use numbers, right, to explain what you're trying to get to.
All right. No, I like that. I think it was a very thoughtful conversation, very insightful. So thanks a lot, Jelger. Really appreciate to have you here. And for the audience, thanks for listening in and stay tuned for more episodes coming very soon.
Thank you very much.